Have you ever looked at the market and felt like you were watching a movie where the plot just does untad up? Right now, gold and silver are shattering records, hitting all-time highs day after day. Turn on any financial news channel, and you'll hear a chorus of experts shouting from the rooftops, warning of an imminent market top, a catastrophic crash just around the corner. It's a baffling contradiction. How can these ancient, tangible assets be soaring with such confidence while so many are bracing for impact? What hidden story is the market trying to tell us? Are we witnessing the final frantic moments of a bubble? Or is something far more profound, something structural, shifting beneath our very feet? This surge in precious metals isn't the result of some sudden euphoric wave of optimism washing over global markets. Quite the contrary. You peel back the layers, you'll find that these new highs are not built on hope, but on a bedrock of deep-seated anxiety and mounting macroeconomic pressure. This isn't a party, it's a flight to safety. Think of it as a barometer measuring the atmospheric pressure of our financial system. And right now, that barometer is signaling a storm. The first major force at play is persistent, sticky inflation. For years, we were told it was transitory, a temporary blip caused by supply chain snags. But now, the reality has set in. The cost of everything, from our groceries to our gas, continues to climb, stealthily eroding the purchasing power of every dollar we save. Each time you look at your bank statement, that number might be the same, but what it can actually buy in the real world is shrinking. This slow-motion theft is forcing investors to seek refuge in assets that can't be printed into oblivion, assets that have held their value for millennia. Then there's the elephant in the room that no one wants to talk about at dinner parties, the colossal mountain of public debt. Governments around the world have been on an unprecedented borrowing spree, racking up trillions upon trillions of dollars. This isn't just an abstract number on a spreadsheet. It has real-world consequences. To manage this debt, central banks are caught in a trap. They can't raise interest rates too high without risking a sovereign debt crisis, but keeping them low fuels the very inflation they're supposed to be fighting. It's a game of financial Jenga, where every move threatens to bring the whole tower crashing down. This swelling debt is a direct challenge to the long-term stability of fiat currencies like the dollar. It's a quiet acknowledgement that the promises of tomorrow are being paid for with a currency that might be worth significantly less. Compounding these issues is a palpable sense of investor fatigue. The old narratives, the ones that have guided investment strategies for the past decade, are starting to wear thin. The story of buy the dip in tech stocks. The belief in the perpetual genius of central bankers, the faith that a soft landing is always just around the corner, these tales are losing their power. Investors are tired of the volatility, the whiplash between greed and fear, and the nagging feeling that the game is rigged. They are beginning to look past the ephemeral glow of digital assets and complex financial derivatives, and are rediscovering the enduring, tangible value of real physical assets. This isn't just a trend, it's a revaluation, a collective search for something solid in a world that feels increasingly fragile and uncertain. This is the crucial point to understand. The dramatic rise of gold and silver is not just another speculative frenzy. It's not like the meme stock craze or a fleeting crypto bubble. Instead, it signals a profound, almost tectonic shift in belief. Prices aren't soaring because everyone suddenly thinks the global economy is in fantastic shape and poised for a new golden age of prosperity. It's the exact opposite. Prices are climbing because the foundational faith in our modern financial architecture, the trust in fiat, currencies, and the institutions that manage them is beginning to erode. When people start questioning the very definition of money, they don't rush to buy more of what can be created out of thin air. They turn to what is real, what is finite, and what has served as a store of value throughout human history. This is not a vote of confidence in the system. It's a vote of no confidence. The market structure itself is changing, as a growing number of people realize that the emperor, in fact, has no clothes. Given this context, getting bogged down in the typical Wall Street debate of "is this a bubble?" completely misses the point. It's asking if gold and silver are at a top is like asking if a lifeboat is overcrowded while the ship is sinking. It's the wrong question. When the very ground you stand on is unstable, your priority isn't to predict the next wave, but to find a more solid footing. This isn't about timing the market perfectly or catching the peak of a speculative mania. Framing it that way is a trap, leading to analysis, paralysis, and missed opportunities. The real, more pressing question we should be asking ourselves is this: what if this is onto cyclical high within the old system, but the beginning of a completely new one? What if we are witnessing a fundamental regime change in real time? Instead of trying to outsmart the market by betting on a top, a more prudent approach is to position yourself for this unfolding regime change. This moment calls for a shift in mindset. Accumulating gold and silver right now shouldn't be viewed as a speculative gamble on short-term price movements. It's not about trying to get rich quick. Rather, it should be seen as a strategic hedge, a form of financial insurance against the systemic erosion of money, and more importantly, the erosion of confidence. It's an allocation to certainty in an age of unprecedented uncertainty. It's a deliberate choice to own a piece of the ultimate monetary reality, an asset that sits outside the conventional financial system and is not beholden to the promises or failures of any single government or central bank. Think of it not as an aggressive play for profit, but as a defensive move to preserve wealth in a world where the old rules no longer seem to apply. Here lies the ultimate takeaway, the lesson that echoes through the history of every major market shift. Markets do not wait for a consensus to form. They do on pause and take a survey to make sure everyone is on the same page before making a move. The biggest opportunities are never found in the crowded trades. After the narrative has been universally accepted and broadcast on every news channel, by then, the move is already over. The true opportunity lies in the uncomfortable space of ambiguity, in having the clarity and courage to recognize when a new story is unfolding right in front of you long before the crowd even realizes the old one has ended. The question isn't whether gold and silver will be validated by the masses tomorrow. The question is whether you can see the writing on the wall today.